Pretty crazy day for the semiconductor market today. We can see SMH, a semiconductor ETF, was down roughly 7.5%. Other popular companies like Nvidia were down nearly 10% on the day. On today's episode, what I want to do is take a closer look at four companies that I believe are sitting at interesting values right now. And I'm going to discuss kind of their bullish case for the overall market. So I don't want to hold you hostage. The four companies we're going to take a closer look at is obviously a semiconductor ETF, SMH, Air Test System, which definitely has some growth opportunities in EV and AI. On Semiconductor, another company that deals really well in the automotive market and is seeing some opportunities in AI. Qualcomm, a big player in the AI market right now and kind of the consumer goods market with mobile phones and Internet of Things. And more importantly, for each company, we're going to look at things like PE ratios, balance sheets, and we're going to look at growth opportunities and recent developments from recent earnings. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
And before we get started, if this is your first time here, my name is Jose Najarro, semiconductor investor, a master's degree in electrical engineering, and I worked at some pretty cool places. So enjoy me geeking out on semiconductor stocks today. But if you haven't, make sure to hit the thumbs up and the subscribe button, as this is going to be the best place you're going to find any semiconductor news. All right, so the first company I'm going to start off is going to be the easy one. And the easy one is actually the semiconductor ETF SMH. I'm going to be honest, if I didn't care much about investing in individual companies or learning about individual companies, I think my whole portfolio would be pretty much a semiconductor ETF. The main reason is we're going to take a closer look at SMH, which is the semiconductor ETF, has completely outperformed the QQQs and the S&P 500 historically, right? In the past 10 years, it's doing much better than the QQQs. And obviously right now you're kind of seeing that bullish trend thanks to AI. But even prior to this AI trade, we can see that as the semiconductor market has completely outperformed those other indexes. So for me, semiconductor ETF is probably the best way to kind of get exposure into the semiconductor market. And like I mentioned, if I cared less about any of these companies, I think I would choose this ETF or some others. There's definitely some other out there like SOXX, but pretty much a semiconductor ETF would probably be my first approach to enter the semiconductor space. Obviously, the semiconductor market is cyclical within its own sense. So no matter what, you're going to see volatility within this space. But personally, like I mentioned, VanEck is my favorite approach. Now, enough with that boring approach, which I think is probably one of my best approaches as a long-term investor. Next, we're going to take a closer look at individual companies. So the first individual company we're going to look at is Aehr Test Systems. This is ticker AEHR. So Aehr Test System is actually a very, very small company, market cap of $392 million. Now, the reason I enjoy Aehr Test Systems is Aehr Test System actually provides equipment needed for the manufacturing of chips. They're what are used as burn-in tests, so they're pretty much kind of stress testing chips. The great thing is right now, a lot of their test equipment is being used in kind of the automotive market. And because the automotive market, especially in EV, is kind of seeing a weakness in demand, this company is obviously seeing a weakness in their overall revenue. But I personally am bullish for the EV space. I'm personally bullish for the automotive space and the EV transformation. So for me, this is definitely a long-term play. Now, in forms of Aehr Test Systems, like I mentioned, their most recent revenue in they just reported their Q4 2024 fiscal year. So they are a few quarters off from your typical calendar year, but here they did report a growth of 2% year over year. Again, like I mentioned, this overall market is seeing a bit of a slowdown, so it's not a heavy grower right now. But I believe in the upcoming years that will change. The other thing, in their most recent quarter, they did announce a significant development by acquiring a company called Incal Technology, which is a manufacturer of reliability test and burning solutions particularly for AI processors. So, like I mentioned, a lot of their burn-in test or kind of this stability testing solution that they have are pretty much for the automotive market. But they see this huge growth in AI chips right now that they are entering that space and providing kind of these burn in and test solutions for that market, which I believe can definitely grow dramatically in the upcoming quarters and the upcoming years. Like I mentioned, one of the major headwinds for this space is just the EV market is seeing a lot of slowdown right now, but I believe that's more of a cyclical problem opposed to a long-term problem. Now, growth opportunities for this company, like I mentioned, silicon carbide, this space I personally believe is very bullish in the long term of things. I also mentioned that AI processor market. And not only that, this company is also working on silicon photonics. And for those that are not familiar, this is form of optics communication between chips, especially things like AI processor and next generation processors. So this definitely has a nice growth opportunity. But like I mentioned, this is a small player, and this is kind of one of those higher risk, higher reward type stocks. So Air Test System, fundamentally PE ratio forward and forward 1 years are in the 20s. I believe these are very low estimates. Not many analysts are following this company because it's very, very unpopular. And I believe they will be their future PE ratios are a lot better than this. In forms of balance sheet, they have positive cash flow from operations, even though it's almost break even. They have plenty of cash at hand, roughly $50 million. Remember, this is only a company with about 360 million in market cap, and they have no long-term debt. So overall, balance sheet looks pretty impressive. Now, if you are curious where I got these information, this is from my earnings ebook, and I cover so much more than this. And if you are curious, make sure to check out the link below. You also have my link to my free Substack where I send updates on Nvidia and other companies in there for free. You'll also see a coupon code for the ebook, so check all those links down below. All right, the second stock we're going to look at is ON Semiconductor. Now, this is another one that focuses in the automotive space. We can see right now from its yearly high, the stock is down nearly 28%. Year to date, the stock is down roughly 13%. Just today, the stock was down roughly 9%, sitting at a market cap of roughly $30 billion. Now, I want to talk about the kind of solutions of ON Semiconductor. So ON Semiconductor is a semiconductor company focused on intelligent power and sensing technologies for the automotive, for the industrial, and other high growth markets. Very similar to Air Test System, because it depends a lot of its revenue in the EV and the automotive space, which is a market that is seeing a slowdown. This revenue in most recent quarter was down 17% year over year. So right now, they definitely believe that a huge growth opportunity is coming in the EV space. For example, their two key products, or one of their main key products, is silicon carbide technology, which is the key focus on Semi. And the CEO did mention that they remain on track to outgrow the silicon carbide market growth by 2x in 2024 through share gain and geographical and market diversification strategy. And so overall, like I mentioned, the EV space, the automotive space right now is pretty weak, but I do believe in the long-term opportunities like this are very, very interesting. So the first market segment that they're very bullish on, like we saw, is the EV and automotive, as in the long term, we're going to probably see an increase in penetration rate in EVs and just the overall bullish trend in the EV market. Now, the second thing that they are bullish is AI and data centers. ON Semi sees opportunities in AI data centers as they have power solutions, right? Power solutions. And as AI data centers rack increase from 40 kilowatts today to 120 kilowatts in 2025, their addressable content is expected to increase from 2,500 to 9,500. So a huge growth opportunity here because of AI and data centers. And like I mentioned, because of the EV space as well. Now, ON Semiconductor's forward 1 year PE ratio sitting at 14.81. Again, I believe that this company and this market is being punished a lot because there is a lot of negative, and we're seeing the numbers are pretty bad right now. In the long term of things, I believe this is going to be a great opportunity for me to buy into the stock and maybe increase in the future. So this is one on my watch list as well. On semiconductor, while they do have a nice amount of debt, they do have plenty of cash flow from operations, roughly 2 billion in trailing 12 months, and they have roughly 2.7 billion in cash and short-term investment. So they have a nice cash flow machine. They have a nice amount of cash in the bank, so not to worry about their overall debt. Now, the final company we're going to take a closer look at here is Qualcomm. So Qualcomm is down roughly 6.8% with a market cap of 181 billion. Year to date, the stock is only up 16%, but at one point, this stock was dominating up over 61. So Qualcomm, for those that are not familiar, they did have a nice amount of developments in the past few quarters. For example, they're seeing strong growth in their automotive and IoT segments. They recently just launched their first true PC processor for the laptop market, the Snapdragon X series, and they continue to get traction in premium Android and smartphones. The CFO, during their most recent earnings, did mention that they are on track to deliver approximately 50% year-over-year revenue growth in fiscal 2024. So, here, like I mentioned, this is just more information that's coming out from my ebook. Make sure to check it out on the link below. Now, growth opportunities for Qualcomm are the automotive space. They secured more than 10 new design wins this most recent quarter. The AI PC market, obviously the Snapdragon, they are seeing a good traction from this, as this is their first time going from pretty much a zero market share to eventually growing in the PC market and industrial IoT. They mentioned as the industrial sector is transformed by AI, they expect an increase in demand for more complex on-device processing. And obviously, Qualcomm is known for its Internet of Things processing solutions, where their chips are used on smartphones, on AR glasses, on VR devices, on smartwatches, and the list goes on and on. So some of their key products are obviously the Snapdragon X series that just came out for the PC market, their upcoming next generation Snapdragon 8 for the mobile market, and another growth opportunity is the automotive space. So these are the three companies plus a semiconductor ETF that I think are definitely ones to keep a closer eye on, especially as we're kind of seeing this nice downturn. Let me know in the comments below, are any of these ones that you find interesting? Let me know in the comments below. Take care, have a good day, and see you all next time.